Hello, this is Derek Iswell, Chief Investment Officer of Shelton Capital Management with a Shelton CIO Minute. Today, I'd like to talk about inflation, specifically look at some market-based data on future inflation expectations. This chart here is a chart of break-even rates for the next 2, 5, and 10 years, which reflect the market's expectations of average inflation levels over those horizons. As you can see, up and through 2020, the market essentially expected inflation to remain around 2% for the foreseeable future. But then the pandemic hit, and the first effect was that of supply chains. With the breakdown in trades and the constraints on supply chains, expectations moved up closer to a 3% level. And then subsequently, when fiscal stimulus took effect, inflation expectations continued to rise even higher, up through March of this year, when the Federal Reserve began to raise rates. At that point, then, the break-even rates began to reverse, and over the last 3 to 4 months have essentially returned back to their 2021 levels. The message here is that markets are satisfied the Fed has control over the demand-based side of inflation, but we still have uncertainty over the supply-based side of inflation. And from what the markets can see from here, inflation is likely to settle in at a higher level than it has in the past. Thanks for joining us, and I hope to see you again at the next Shelton CIO Minute.